Home values are growing. That's the good news. The bad news for homeowners is that prices are rising at a far slower rate than a year ago. Home prices increased 4.5% in the year ended in January. That's according to the S&P Case-Shiller Home Price Index. But as home prices rise, that's leading to overheating in some markets. But not all of that overheating is alike. Diana Olick explains.
Jennifer Castillo and Justin Thornton are looking to buy their first home together in Washington, D.C. So far, they haven't found it. What they have found is...
I would say sticker shock.
I would say sticker shock.
Tight supply in the D.C. market is leading to bidding wars.
8, 9, 10 offers, $100,000 over asking, all cash offers from, wealthy families. So, I mean, it's just been pretty difficult.
Yeah, to the point that it becomes unreasonable.
D.C. is now overvalued by about 10 to 15%, according to a new report from Fitch Ratings. But the values are based on strong local fundamentals, unlike some other markets.
We don't really see as much risk in that market as we do in a place like Las Vegas, like Phoenix.
Add Riverside, California, and Miami to these former boom-to-bust markets. They're overvalued due to stiff competition from investors after the housing crash. Their economies are not as strong, and the high prices will likely be unsustainable, as opposed to Seattle, San Francisco, Houston, and Austin, which are also overvalued but supported by both growing populations and economies.
It's the discrepancy between those places that have restricted supply, investor demand pushing up prices, versus those places that are really going through a general economic expansion.
Home prices in the nation's largest markets are accelerating again, seeing stronger annual gains in January than December. That's partially due to tight supply, but also to an improving economy and low interest rates. Last spring, the steep price gains hurt sales, but this year demand appears to be stronger, even though prices are rising at twice the pace of incomes. It's really a double-edged sword. Higher prices bring homeowners up from underwater and back into the market, but they also price potential buyers, especially first-time buyers, out. Justin and Jennifer are not giving up.
We just have to have a lot of imagination when we look at property and see beyond what it currently looks like.
But perhaps adjusting their wish list. For Nightly Business Report, I'm Diana Olick in Washington.